Well, I mean, that was the question people had in 2013. I mean, in fact, I thought that in 2013. I tweeted about it. If the government was going to crush it, like the IRS, doesn't designate stolen property or counterfeit money as property, right? If you were counterfeiting stuff, the IRS wouldn't give you a designation of
As
property.
international markets change, Bitcoin is gaining traction as a financial tool and a groundbreaking store of value. In his most recent interview with Mario Nawfal, Michael Saylor explains why he believes the price of Bitcoin could reach unprecedented heights. Saylor talks on the special role that Bitcoin plays in a world where conventional investing outlets are having trouble. As governments and central banks adapt to changes in the economy, Bitcoin has transformed from a fringe experiment to a vital part of institutional portfolios, increasing demand and lending legitimacy. It is an unrivaled hedge against inflation and economic uncertainty due to its decentralized structure and restricted supply. In an uncertain world, Bitcoin is emerging as a rare form of digital gold and a reliable non-governmental asset. By connecting traditional finance with this growing digital asset class, institutional investors now have safe, regulated investment options. Listen to Michael Saylor talk about the future of Bitcoin and why this might be the ideal moment to purchase before the next big price spike by watching the conversation's highlights.
Yeah, well, gold may be regulated, but it's also worth like $15 trillion, and Bitcoin is worth $1.3 trillion. So if we end up with the failure of gold, Bitcoin 10x's from here. So in terms of being regulated, it is regulated, right? The IRS regulated in 2014 by saying it's property, you have to pay tax on it when you sell it. And it's regulated via these ETFs. So if you're an institution and by charter you have to own securities via a regulated custodian or via a regulated bank, you're buying FBTC or you're buying IBIT. Just like the SEC just approved options trading, but only on IBIT. So there are regulations. The regulations solved the issue of custody. They solved the issue of compliance. And that's why these spot Bitcoin ETFs are the most successful ETFs in the history of Wall Street, right? Billions of dollars is stampeding into those instruments. Oftentimes what's going on is the regulated instruments, like IBIT is one, but so is MSTR. They're basically regulated securities trading on high volume stock exchanges in the United States. There's a lot of liquidity, a lot of traditional capital that can trade those instruments. That's why they buy them, sell them, and trade them. And so no one's saying it's not going to be regulated. In fact, it's the opposite, which is as it's regulated, it's the green light for traditional money and institutional money to enter the asset class.
To crushing it.
Well, I mean, that was the question people had in 2013. I mean, in fact, I thought that in 2013. I tweeted about it. If the government was going to crush it, like the IRS, doesn't designate stolen property or counterfeit money as property, right? If you were counterfeiting stuff, the IRS wouldn't give you a designation of property. So we lurched towards something clearly being legitimized in 2014, and then between 2014 and 2020. It was a question mark, but then in 2018 or so, you started seeing options on CME trading on Bitcoin, if you recall. And so that was another endorsement. And then when Fidelity entered with Fidelity Digital Assets, that was a third endorsement. When dozens and dozens of public companies started buying Bitcoin and were approved by the SEC to buy the Bitcoin and list, that was a fourth endorsement. Then when you actually saw the last administration, you saw positive speeches and characterization of Bitcoin as a digital asset. In fact, Gary Gensler, Jerome Powell, Christine Lagarde, and Janet Yellen all acknowledged it to be a legitimate digital asset. They said Satoshi created something innovative and real. And by the way, they classified it as a speculative asset, but not as a currency. The real uncertainty around Bitcoin has been around its use as a digital currency, not as digital capital.
With a market value of $1.03 trillion, Michael Saylor cautions that the regulatory momentum surrounding Bitcoin might lead to exponential expansion. Saylor thinks Bitcoin might rise if it takes the role of gold as the main store of value, even though it still lags behind gold's $1.05 trillion worth. Since 2014, Bitcoin has been taxable upon sale due to its classification as property by the IRS. Institutions can now invest in ETFs like the CFTC and SEC-approved FBTC IBIT. Bitcoin is getting ready for broad institutional use thanks to its regulatory approval, which is also making Bitcoin ETFs the most successful investments on Wall Street. Saylor highlights Bitcoin's standing in countries with robust property rights, such as the US, Europe, and China, by comparing it to owning valuable real estate, despite the fact that it is prohibited in North Korea and Cuba. Influential individuals like BlackRock are running Bitcoin holdings as a result of its rapidly growing general acceptance, and the SEC and CFTC have even, outside of ETFs, Bitcoin is 95% decentralized, guaranteeing its long-term resilience in the face of growing regulation.
Right. If you're holding something and you want to do 10,000 transactions without any AML KYC at any size, now you're crossing over banking regulations and currency regulations, right? And that's highly controversial. But what's not controversial is whether institutions and individuals and corporations in the Western world can own property. So it's been acknowledged, like Berkshire Hathaway can own billions of dollars of Apple stock, right? Warren Buffett's not going to wire $1 billion of Apple stock to Africa without acknowledging that transaction publicly. So the use of Apple stock as currency would be controversial, but the use of Apple stock as property or capital, not so controversial. And so when you think of Bitcoin as, I own a building, right? Am I allowed to own a building? Well, the truth is you can own a building in China as well as in the United States or Europe. You know where you can't own a building? Cuba or North Korea. So where it's illegal to own property, then Bitcoin is in a regulatory gray zone for sure. But where it's legal to own property, you're going to be able to own it. And I think we've crossed that chasm between 2020 and 2024. It's quite obvious, right? If BlackRock is handling the asset, if there's 100 public companies handling the asset, if the SEC is approving options trading on the asset, and if the CME trades commodity options approved by the CFTC, it's pretty obvious that the asset has been adopted and is supported by the regulators. So I think we're past that question. Yeah, sometimes people think that, but what they're missing is in 1933, the US dollar was pegged to gold, right? It was $20 per ounce. And so the US dollar is not pegged to commercial real estate in New York City. And the US dollar is not pegged to Apple stock. And the US dollar is not pegged to Bitcoin. And the US dollar is not pegged to the value of your sports team. So if the US dollar was pegged to something, then of course it becomes very political. But and what happened after that act was the US devalued the dollar from $20 to an ounce to $34 to an ounce. So that was all about getting off the gold standard, right? There is no Bitcoin standard. So the time for you to worry is 50 years from now, when all the money in the world is Bitcoin, when Bitcoin is 450 trillion and it's worth, go figure, $50 million a coin, and then the currency of the country you live in is backed by Bitcoin, then you might see that what'll happen? The more likely thing is that currency, the whatever yo-yo dollar, will be pegged to Bitcoin, and then someone will take over the government and said, hey, we're going off the Bitcoin standard. But they're not going to get rid of Bitcoin. But if you do that, if you go to Bitcoin treasuries, you'll see that 95% of the Bitcoin isn't in these ETFs. 20 for every dollar of Bitcoin in the ETF, $19 is not in the ETF. So Bitcoin is already a global asset outside the control of any nation state or any company or any actor. And that's what makes it so special. And if you think of it as property, It's no more risky for a New Yorker to buy $100 million of Bitcoin than it is for a New Yorker to buy $100 million worth of warehouse space in Manhattan. Right? No one walks around New York saying, oh my God, the government's going to seize my warehouse space because they want to devalue the dollar. You're like, well, are you kidding? The government isn't backing the dollar on warehouse space in Manhattan.
The volatility and growth potential of Bitcoin are demonstrated by its recent price behavior. It fell 1.2% to $67,400 on November 3, 2024, but it increased 2.0% every week. Strong interest is evident from its $24.05 billion 24-hour trading volume, particularly from institutions anticipating a price increase. The declines in Bitcoin are viewed as entry points, and wave riders can take advantage of the short-term volatility. Future developments, such as the U.S. presidential election and the FOMC's rulings, may increase the allure of Bitcoin as a hedge, particularly if the currency is depreciated by economic stimulus plans. Bitcoin's 59% market share indicates, in the face of uncertainty, traders want stability in top assets, which boosts confidence. Market volatility caused a brief decline in Bitcoin, with analysts projecting institutional demand of $66,000. Bitcoin's popular position as an impending explosion is being reinforced by the creation of ventures dedicated to the technology supporting the cryptocurrency by surge firms such as Strive Enterprises.